Start recording.
What's going on, everyone? We got like 6 people here today. We got some people putting in the work after hours.
They're about to see my destruction and then rise up from the ashes. So
No, let's go. That's what it's all
yeah.
about.
All right. So let's look at it here. I don't really want to break down the OTC. I think that, OTC are very few and far between, so that's not really.
I agree. Yeah, I agree.
Okay. Let's see.
Which, for anyone that is newer to trading, that's watching this, that's studying, whenever you're watching it, the OTC market, guys, just used to be, I mean, as close to free money as you can call free money in the stock market. And then they just came through and murdered it when they did that stupid, what was it? Like, you couldn't trade half of them anymore or whatever that deal was.
Yeah,
They just killed the volume to it. They
it
killed
was
the volume.
the OTC gray market. You had to be a
Yeah.
professional trader to be able, and they would always come from the gray market and then go to pink land. And so now like there's just I don't know, it's dead. But yeah, I found
Yeah.
them all here. So let's look
Sweet.
at, and this is a good recent example too. Nexi. Let's see. Nexi on 1/3/24.
Let's see the third. And are you gonna be going putting that chart on your screen? Oh yeah, it is on your screen. I'm an idiot. Cool.
So this one's really painful now that I remember it. Uh, let's just get into it here. Okay, so it says I got in at 10:23. And oh my goodness. Yeah, okay.
Let's see. 1023. You said 1-3. I'm also looking on my screen too.
So I got in on that bad boy right here and lost right there.
Oh,
Um,
okay. Oh, okay. Yep. Yep. Oh,
yeah.
that's yeah. Yeah.
It's
Okay.
kind of rough to realize that I bought there. Like when you look back at it on hindsight, you're like, man, that's so extended off the lows. Why are you buying there and all these wicked candles? But I guess in the moment, like I don't know, I was sized up, so I was like I said, I kind of had my blinders on. I don't know if that makes sense.
No, trust me, I 100% get it. I feel like that's honestly the same exact thing I went through when I started sizing up. Is all of a sudden like you said, you look back at it and you're like, well, yeah, now it makes so much sense.
I mean, if you look at
Like,
the volume too, it correlates with it perfectly and how it breaks with it. Normally, that's something that wins 70% of the time, but this whole week I'm about to go through them all, none of them work. It was brutal.
and so I'm gonna just take notes while you're going over this, but I think what you just the kind of the volumetrics trend you just drew is something I want to touch back on a little bit on
Yeah,
Nexi.
we call that volume wash. I learned that from Dan Irish. And then when it
Mm-hmm.
broke through, you get the volume confirmation. So typically when you buy right here, so this is how I would buy this. You would have your spike, so your A, then your B is set right here, then your high or low, and I'm looking for the first 1 minute candle to make a new high, which is technically right here, but I don't think I bought it till right here anyways, 1023. Yeah,
So,
1023.
so, and just to clarify, you're buying on the breakout of that trend break on both the volume wash and the actual price candle.
Yeah, so I bought it
Yeah.
as it broke above this candle, which the high is 887 and the low is 854. So that's my risk as well.
Yeah.
So 30 cents. And I mean, I was looking for $3 a share. I mean, in hindsight, it looks really bad. Um,
No, but I think this is good to go over. And I see exactly what you're looking for there. And it's a clean pattern if you're not looking at the right? If you're just looking to that, yeah, if you keep going that way, it looks a little worse because it keeps dumping. It gets it's so extended in the moment. But also when you're trading it, it's at high a day. You've got that wick up there. That you're just looking for that breakout. I mean, if it had broken out over that high's wick, it probably would have been off to the races.
right. Do you think something like this is like when you get something that's maybe, I don't know, speculative that you maybe shouldn't buy when you do buy it? Like, if it doesn't just take off and it comes back to your entry, probably something you should just cut, break even.
Yeah, I would say yes, but especially I've noticed on I would almost say, I guess buying a if you're buying a wedge right at high a day and also notice like how short this wedge lasted for. Um
Right, the
at
time.
high day, it was only what 10 minutes basically of wedging. It was really only like 5 minutes of actually wedging. But
Right.
that consolidation near highs, 5-10 minutes, let's call it. I really struggle now taking full size at the highs. And I was kind of talking about that on today's webinar too, where like if I'm buying strength, I've really struggled to use full size risk. Um, but that can also be applied like even if your strategy is buying trend breaks, if you're buying a trend break at high of day, same idea, you're buying that strength. Whereas if you're buying consolidation off VWAP and high of day is already set in, there's kind of a more realistic expectation where if this trade is going to work, it's going to make it to high a day, and it's just kind of lining that risk level up. But what I also will say is you bought that in the one of the more volatile times of the day too. So if there's any time where a stock is going to consolidate really quickly near highs and then continue its breakout, it's going to be around that time. It's going to be right after it just squeezed through the previous high day, consolidating it next high day, still early in the morning, still a lot of eyes on it, a lot of volume. I feel like there's part of the sense where that was just a trade where unfortunately it wicked hard and it ended up failing. Um, the win rate on that is still a relatively high percentage, all things considered. So I don't think that was the worst trade. Again,
Right.
just an example of wedges not really working, following through the way they should.
Yeah, and also, like, if you look, it was above not only high a day, but, like, pre-market highs, which is what we want.
Hmm.
But now that I'm really looking at it, like, where did it come from? All the way down here from 3 and up to 8 was pre-market highs. So it's like I was asking for it to do a little too much already, which it did up here anyways, which is probably just a short squeeze, if anything.
100%. And the other thing to consider too is this essentially, right, within a matter of what, 20 minutes, 30 minutes, went from low of day, it made a new low of day, then squeezed to a new high of day in a matter for from what 10 9:59 until 10:16, right?
Right.
So in whatever that is 17 minutes, it went from low a day to high a day. So I mean it already made a massive move on top of that.
Yeah.
Um whatever that math comes out to, a little over 30-40% move. That's and like you said, it came from what, $3 in the morning in pre-market. So
Yeah.
it was just extremely extended. And I say this a lot too, the more extended a stock is, the longer I like to give it to consolidate to prove itself. Um, and I feel like that's also part of what we're seeing here. And then obviously we start seeing as Nexi continues to kind of put in a longer, wider consolidation, that's when we got that push to 11. You can draw that same more drawn out trend
Yeah, I was going to show
from
you
that.
my next entry if you didn't
Oh,
mind.
yeah, let's see it. No, keep going. Sorry if I'm cutting you off too. I'll
No,
let
you're
you keep
fine.
talking
I
there.
was going to let you go, but then I thought, well, he's trying to move on before I've already had 3 or 4 more losses on here, man.
No,
So,
keep them coming. Keep them coming.
all right, so let's look at this next one. It says 1052, 790 versus 770. So 1052. Yeah, right here, 790 versus 770. This candle, and if you notice, I was looking for because what had been working the day before was wedges that were being set above their high of days. So,
Yeah.
I was looking at
Can
that, I believe.
can you can you circle your entry for me? This next one you're talking about?
Yeah, yeah. I
Oh,
got it
that's
right
yeah, right in
here.
there.
And so I bought it on this candle, risking this, the high of that, risking there. And then obviously I lose right here. Had it have
And then
broke the
yeah,
wedge, I would have moved my stop up to this where the V meets.
so you're looking right here. Okay. Okay, and so you were saying that that particular I want to make sure I've got that
There's
same
also
one
the
as
volume
you.
correlation, if you notice.
Yeah, let's see that volume, the volume wash again.
Yeah. Usually that's a sign, like you get that volume wash with a wedge, you're in for a victory. So I don't know. It's like
Mm-hmm.
they're finally catching on or something.
Okay, so I see your buy there. So you were buying a little bit before kind of that bigger picture trend, which still didn't work either way. Even if so, if you
Right.
kept drawing that downtrend line, we still broke out of that bigger picture morning trend, both on volume and on price. And either way, that would have been a loss.
Yeah.
Which is where, if I'm being completely honest, and I don't know how many more trades you took on this throughout the day. Was there another one after this?
Yeah, at 11:04, I think this is where I started to get upset.
Let's see. Oh,
uh,
dude, I don't blame you. I'll be doing the
I
same
think
thing.
I went in, yeah, 11:04.
11:04. Are you talking market time?
Yeah,
Okay, market time. Like it's not Eastern. That's probably what I should be
right
calling it.
here.
But right,
I mean, that's
11:04.
beautiful. And you know what I mean? Like that's a beautiful entry.
Yeah, yeah. It that and that's the one I'm talking about right there. So that would have been. I don't know. I feel like the entry before felt so the one you were talking about right
Right
before this
here,
one. You can keep it. The where?
right here.
Where's your mouse? Oh, I think your mouse. Oh, there. Okay, right there. Yeah, yeah, yeah. That one right there. That one felt a little bit early for me. Now that's just because I've also, as I've mentioned with a lot of people in here, I've definitely decreased the number of scalps that I'd take, and so I'm generally waiting for these longer, more drawn out trends to break. But that being said, a longer, more drawn out trend would have been the entry you took right there, and I would have absolutely that. What time is that? It's 10. Yeah, that 11:04. I would have taken that same exact entry with you, and I would have taken a loss on it.
Really.
And that pro now, and that ended up being the one that works here, which is
But
pretty.
also, there's kind of this right here. And then if you think about it, and you look at that entry right here,
There is that entry too. That's 100% true.
that's
Oh,
nasty.
there were some really, but again, the micro wedges weren't working before, and I think I
Right.
would have gotten scared off by that, by the fact that, I mean,
Right.
how many of those I'm seeing the two entries you took on those micro wedges, and then there's even that micro wedge that failed. It would have been like 11:53.
Yeah.
Um, Another micro wedge that failed. I don't know. I would have been a little bit scared taking that. The only one I may have taken was that 1242 spot. But again, now we're getting into midday on a stock that's continuously failed to hold its follow through. And obviously it after it broke out, it just wicked from 11 to 8 in 1 minute. So I mean, in a
Mhm.
sense, I guess it did fail its follow through. It just would have given a really nice opportunity. I would have been out by then.
Yeah.
Um, but everything considered, that should have gone to like $15. You know what I mean? Like
Yeah.
that shouldn't have, and it never did. Yeah, there it is, right there. Another failed wedge, and it just, well, did it? I don't even know if that really did confirm on the volume side of things.
Well, I mean, yeah, see right here, it broke.
Yeah, yeah, that's what I'm saying. Like right there, and that would have
And I
been
did lose
again if
there.
you did take, yeah,
Yeah,
and
I
I
bought it
I would have taken a
right
loss there
here.
too. Yep, I would have taken that same trade with you, and I would have taken a loss on it. And then that's probably when I would have raged and I would have left.
Yeah, so that was 6 losses in 1 day. Uh,
That's brutal.
yeah.
That is brutal.
And I had
And
went
four
through
of
a
them
whole
was that.
spiel to, like, size up and psych myself up for it, you know what I mean? Like, because I had been doing so well, like, I literally went 15 of 16 on multi-day breakouts in December.
That's insane. So you're going into January with that same mindset,
Right.
obviously expecting a similar kind of track record. And on top of that, next thing was a multi-day breakout. I mean, it was a really clean. I didn't even really look at the daily chart yet, but I'm looking at this. Yeah, I
It was a
guess the
breakout on that day.
the only thing that I'm now looking at that changes things is draw a resistance line from put a line in there real quick on that 850 breakout. So there's your day, and now right there. And now go back to the intraday after you put that line in. This changes things a little bit.
Yeah, so to me, a wedge underneath or just at a breakout, from my tracking, the odds go up even better. So if a wedge is only like 50%, right? Well,
Right.
a wedge that's attached to a multi-day breakout daily chart, the odds go up to the multi-day breakout win rate, but then you get the great risk reward of the wedge to top it off. So then those are my most best trades. That's why I really thought I was going to get the victory on this one.
So I agree, right? However, what I will say, because that is all true. When a wedge is lining up at that breakout spot, it 100% does increase the odds of the breakout. But the so we're looking, I'm focusing specifically on this 1138 to 1154, that micro consolidation right at the breakout level. um the thing that is, I guess, so can you go ahead and now draw a trend line from the 1016 high through that the 1016 high to the 1138 high? So go back from the previous high a day and then draw to that micro consolidation essentially, or even real quick.
Whoops.
Do you mind? Do you mind if I? Oh wait, here you got it. Do you mind if I go ahead and?
You want to switch screen?
Yeah. Do you mind if I share mine real quick?
Yeah, go ahead.
Okay. Let's see, and we're on. Here we are. Okay. So I'm gonna clear this real quick.
Do I need to
So, and I'm
stop
gonna
sharing
redraw
mine?
this.
Oh, wait. Okay. I
So,
had to go over to yours. Okay, this is cool.
oh, okay. So you got it now.
Yeah. So we
Sweet.
can
Okay.
actually
So
have them both up at the same time.
well, no. So they can only see mine now. I can't see yours. So I'll hand it back over to you in just a
Oh,
second.
okay.
But,
Okay.
but you can see where I'm drawing.
Yeah.
All right, so guys, I'm focusing on this micro consolidation right here. And then this dotted line is that previous breakout from December 1st. So that's where we're lining up right here at this breakout level. And so now looking at this, we've got this trend starting to be made, right? So this micro consolidation is really nice, but it's still under this new bigger picture trend that we've just set. And even still, now we have this bit of data, and I'm almost just playing devil's advocate to an extent because I wasn't looking at this live. But we see these wicks right here, which again created this trend, tried to break through 11 or 850, couldn't do it, wicks back down. And so now on this test right here, as we're trying to break out, we did break out of this micro wedge, but and this is something I tend to do in my trading now, is if that micro wedge is extremely close in price with a bigger picture, more prominent wedge, I generally just tend to wait for that bigger picture to break out, because now in this case, we now have a number of factors lining up. We have the multi, I guess really like this month long, but let's call it a multi-day breakout just for this you know ease of everything here. We have this multi-day breakout. It's going through this multi-day breakout, going through this micro wedge. And we just came off of a failed VWAP breakdown, failed breakdown of this kind of support level we've got here. So we have a lot of factors lining up that look really good. We got this reclaim breakout trend, breakout of the multi-day breakout, but we still are just pennies away from this 863 bigger picture intraday trend breakout, where now if that breaks out, we have every bit of confirmation in the books. There's nothing that would suggest that that's not a trade to work anymore. But when we're under that bigger picture trend, we are still now fighting against that. If that does that make sense?
It does to
What I
me.
just said there? What's that?
It does to me. Like typically, I'm just before what I would do is I would, if I noticed that there was a mini wedge within a bigger wedge, I would take like maybe 1/4 the size in the mini wedge and then add
Yep.
the full size through the main wedge break.
Yep. And now, is that what you did here, or were you full, relative to your position or relative to your plan, I guess, anyways, were you full size into this micro wedge break here at like 840s?
No, I because I had taken the full loss earlier, I realized that, I need to size back down on this one. And
Good. Okay.
if I won, then I would just basically make back what I lost. But then I can, like I said, I lost like 4 or 5 more times on it.
Right. Okay. No, so well, it's at least good he didn't take a full size loss on this one.
Yeah.
But that case in point is that there was one factor, one variable that basically kept this trade from working. And, truth be told, that last factor um, was the factor that would be needed, right? I mean, in order for this trade to go through high a day, it has to go through this trend line.
Yeah.
And that is the last trend with everything else adding up. But in the same breath, we had, I think if I'm 3 to 4 other confirmation variables like this dip here, like this breakdown, VWAP breakdown, instant reclaim, back to the breakout level, now a micro trend, like a micro wedge. Those are all also confirmation variables. So it had a vast majority of them. And again, that's just a place that the trade just didn't work. It's just a kind of unfortunate that with 4 out of the 5 variables confirming the trade and then it still fails, just a lack of follow through problem. I'm gonna hold on. I'm gonna hand you back your screen. So if you go back, you'll have to go back into Vimeo and click share your screen again. Just kind of do the same thing you did. It looks like we'll have to probably do that each time we switch. So I'll try not to take over the ship from here.
No, that's fine though. I think it makes it
There we
easier
go.
for you to point out.
No, yeah, definitely, and just for those kind of bigger picture or the bigger explanations, definitely.
Right. I
Um,
mean, and if a pattern, so I know like you went through this, I went through it too. That's why I know you went through it. Is in 2021, I believe, right about I think it was June or July, everything stopped working. And so, did you give back for a while, or did you just like stop trading and start studying?
so you know what's wild is I know exactly what month you're talking about, and I don't know how I did it. That was my second and third subsequent largest months ever. Um, I pulled in like 99,000 in June, um, and then like 100,000 in July.
Well,
And
then
I
what
don't
about like
know.
August or September?
Yeah, so I ended up getting taken to the slaughterhouse in September. I ended up giving back near 70 of that in September. And
Okay.
so yeah, and I think that was the problem, right? Was that like I saw, like, I was very, very, I was talking to so many traders back then and they were all struggling. And I was like, oh my God, I'm crushing it. Like, I don't know why. And looking back at it, it was because it wasn't that moves stopped working, it was that follow through stopped working. Like, so there would be it would almost be like this, right? So go to that big wash candle on Nexi, the biggest one, if you can zoom in there real quick. That now look at that consolidation near high a day. Theoretically, you could have taken that at 10 and sold at 11 within the same minute, right?
Yeah. Yeah.
Theoretically. That's what I was doing. That's what every trade looked like. And I was just I was just taking these 30-second, 40-second scalps, but with size. But again, that was hindsight. I didn't even really fully realize it in the moment. And then once September happened, I had gotten so confident that like, oh my God, everyone else is losing and I'm winning. I'm just a really good trader, that I'd start holding on longer. And
Mm.
then that led to me giving back a bunch and having to
Uh,
study what went
so you're
wrong, if
saying
that
that
makes
you
sense.
could have made more, you could have kept continuing the win streak had you have like not listened to others and you just kept your scalps going.
100%. Yeah. Well, and I think too, there was just the aspect of, even if I didn't talk to any other trader, that was enough of a, I was just killing it then. Like, and again, that's not even like relative to other traders, just for me.
Yeah.
I was killing it. And so I think I would have still gotten overconfident. I don't know. I would imagine I would have gotten a little less confident, but I still think there would have been an overconfidence problem because, again, the fact of the matter is I just wasn't studying enough. I wasn't breaking down my charts enough. I should have realized that my wins were coming because I was scalping so well in a market that favored scalping heavily. I was just like, oh, I'm doing really well. Like my patterns are working, and that was it.
Yeah.
If that makes any
I
sense.
no, honestly, that's why I'm asking that is because it kind of it's like a microcosm of what just happened to me. It's like I just got too comfortable with my patterns and instead of, keeping track of what has been working, my multi-day breakouts are working. Why trade anything else? Which is true. But then when I remember it was December 29th, it was like a $300 losing day. That should have been the day that told me like, you know,
Yep.
you
Yep.
you need to like really like slow down and really reevaluate what's going on. And I feel like that's a lot of the people's issues with trading is, they spent so much time learning something and then when it goes away, they want to keep forcing it versus learning something new.
Mhm.
And
A
so,
hun
that's
You're
kind of
hitting
like
the
what
nail
we're
on the
going
head
through
right
right
now.
here.
Yep. You're hitting the nail on the head, dude. Like, and I think this is important for every trader to hear. No matter how new you are, I'm saying this because I need to tell myself this too, but you are going to go on winning streaks. And likely, I don't even want to say if you're not careful, even if you are careful, you're going to go on to losing streaks too. And generally, your biggest losing streaks will come after your best winning streaks.
Right.
And it's this it ebbs and flows. But the best thing you can, this is why I love trading, because you can get really deeply psychological with it. Um, but even recognizing that you're on a really good winning streak, you think you're preparing yourself like, okay, I'm recognizing this, I need to make sure I'm staying safe. Well, in the same breath, that's great because it's going to limit your losing a potential losing streak or giving back profit, but it also limits you from fully capitalizing or maximizing the opportunities in front of you by being cautious. And so I really think that it's actually necessary to kind of go on some of these losing streaks. The best thing I can say in what Oki just said, there will also be one singular day most of the time that tells you, all right, it is time to size down. I got too confident. Like, you had that $300 losing day, and I wanted to look real quick. If you don't mind, give me just a second. I want to see what here it is. Yeah. So, okay, I came off of August, and it looks like I did pretty well in August too. So June, July crushed it. Looks like I had a $60,000 or $70,000 August, and that was all very consistent. I didn't really go on any massive losing streaks, and then all of a sudden, I had a negative $18,000 day
Mm.
right in the early days of September. Well, what should that tell me? That probably should have told me, okay, in one day I just lost basically 20% of what I had made the previous month. Should have put my foot on the brakes. Instead, the next day wasn't all that bad. It was a $4,000 red day. And then I had a $13,000 green day. And so I was like, okay, I doubled down. I'm doing well. And then what did I go on to do? Just get absolutely slaughtered. And so it's like, when you have that day, when you have that kind of coming to moment, really take a second and say, okay, is it worth sizing down just to keep me safe? Because the worst thing that happens is, again, you miss out on some opportunity because you decided to size down and see if that was a fluke in the market or if that was just you getting too aggressive. You know what I mean? Does that, I don't know if I just kind of went through too much there, if I just said too much too fast, but that's kind of my take on that.
No, I mean, makes sense to me, honestly. I mean, that's kind of what the conclusion I was coming to. It's like, but when you hear it from someone, especially that you respect, like repeating what you say, it's like, I don't know. It just confirms it.
And to give you some, hopefully to give you some good, or just some kind of motivation here. So September, like I said, I lost like 60 or 70 grand. And I remember that was just I was so upset, like just stomach wrenching. So what did I do? I did the same thing that I had done in every other drawdown, and it really was no different than that. I remember when my $4,000 drawdown was detrimental, the back in whatever it was, like I think it was October of 2020. And so I was like, all right, back to the basics. I dropped size drastically for like a week and just got my confidence back. And then in October, I had 3 red days. It was every day was plus 1,000, plus 2,000, plus 2,000, plus 1,000, plus, you know what I mean? I just got that momentum back. And then by the end of the month, I had a, a massive green week because I just built my confidence back up.
Yeah.
So
Well,
it really is just a matter of sizing down when it feels necessary when you're on that losing streak, because a lot of trading is just confidence. It's also the market working in your favor, but it's also a confidence aspect too.
and I'm hoping that by what we're, eventually going to go over, which is what I call like what worked today study session.
Oh yeah.
I'm hoping that by doing that every single day, that like I'm just not going to have that big, huge 20% give back your month day. I mean, it can
Oh,
come, I
yep.
understand that, but like I feel like if I'm really dialed in and on Monday I see that only the penny stocks are trading, 50 million plus in volume or closing up 20%, and I didn't see anything else trade that great other than that, like the next day I shouldn't be looking for wedges, I should be looking for penny stocks.
Right, right. And I think that is one thing that I'm really stoked to see you doing, is taking that what worked today so seriously, because you can, and this almost goes full circle back to the beginning of the webinar here. This is almost turned into a trading psychology talk, and I love it because I think more traders need this.
Right.
But so in the beginning of the webinar, we were kind of talking about patterns change, right? I don't even know if we were recording yet, but patterns, the effectiveness of patterns is pretty cyclical, where maybe 1 month, 2 month, 3 months, you're crushing, I don't know, a first Green Day pattern. And then all of a sudden, it just stops working. And you can either try to keep forcing that pattern or you can adapt. And either way, the market's going to force you to learn. It just might, it's going to take some people longer than others. So the longer that you can go trying to actively adapt to the market instead of making it force you to adapt, the better you are. And, you're still going to take losing streaks. You're still going to take a red day that might be bigger than you want. But if you're able to adapt day after day, you're going to be just in a much better situation than you are taking a week, 2 weeks, a month to realize what you were doing isn't working anymore.
Right.
So,
The quicker you can adapt is key. Like I remember back in 2017, like when I first started, I remember the Bitcoin plays, and I was like, just as soon as I figure it out, they switch up the pattern. It's like
yeah.
now you have to understand, like if you don't want to do what you're doing, which is just maybe one trade every couple of days or something like that, uh, or two, and you're just waiting for what is good, and you're gonna have to really study every single day.
100%. No, and I've been there before too, I mean, that's where I was. If I wasn't building this truck right now, that's probably, well, I shouldn't say that. Because I've also had, last year I bought a business last year, and that took up some time. But in the same breath, you almost get to choose how actively you want to trade by how much you're going to study,
Yeah.
right?
You
Right
earned
now,
it.
I'm in a yeah, right. Well, and yeah, I suppose, and maybe that also is partially because I've gone through enough market cycles now where I don't know every pattern, I don't know every setup, but the ones that I do know tend to occur frequently enough for me to still be able to do that a couple of times a month, maybe a
Right.
couple times a week when the market's hot. But,
Yeah.
and this is especially to new traders, not so much yourself, but in the beginning, you need to just be really sitting down and like looking at everything that's working in the market. And that's what we're going to be helping with. I like this um, kind of what works strategy session. We should be doing more of these or more of those in the future. But where I was going with that is like, you need to still have these fundamental market truths, these understandings of like no matter what, supply and demand is supply and demand. That doesn't change. That isn't going to change a pattern. What's going to change the pattern is like the market conditions. So by understand once you have that knowledge of the fundamental truths of the market, then you can really start doubling down on trying to adapt to the intraday, the week to week changing conditions. Anyways, enough of me jabbering about that. Do you want to go over these any trades here?
Um, well, because you were talking about first bounce days, and I was just bringing it up because I remember recently I was looking for a first
Yeah,
bounce day right here, and I mean, look at it. It goes red all the way down here and then reclaims. Like, that's
yeah.
not how
Let's
first
take a
bounce
look at
days work.
that. No, let's take a look at that intraday. I'm curious.
Yeah, right here. I
Oh,
mean,
that's brutal.
the
That's
print rate.
brutal. That's yeah, and there isn't a trade on that. Like there is nowhere to trade that. And you could say that dip and rip, right? Like the only spot, and that's a really long dip and rip. And it's all that's but and that would work if this was a day one gapper that was up 50 to 100% and it did that, different story. This is a stock that should be a first green day that takes until what time is that it goes green? Or what time does it even break high a day? What is that like noon?
1237.
Yeah, like that's pretty bad, and if it had just gone sideways all morning and didn't go red, it would be a different story. But that went pretty drastically red. It looks like it made new lows on the multi-day chart there.
Yeah, it did.
Like, and that's the market condition we're in with these stupid bounce trades. Like they just don't.
And
I
look how it
miss
gapped up.
when.
It did what you wanted it. You want a gap up when you expect a bounce day. And
Yes, that
then
is
you maybe look
everything
for
you're
your
looking
dip
for.
and rip, right? So you take the dip looking for the rip, and then it just stuffs you a potato chip.
Can you zoom in on the morning action, like that opening action there? Did that break high a day right out of the first couple of minutes?
No.
That wick right there. So that's one thing that I noticed you said, you take the dip looking for the rip. I've like exclusively now only bought unless there's a really nice trend setting up, like if it's like a micro trend on these dip and rips, which that didn't have. I only buy the high a day break. Like
Mm.
that's my that and I think I actually came to that realization like early in 2023 or maybe even late 22. It might have been late 22 now that I say that, but I was really in depth tracking the effectiveness of a stock that gapped up. I think the criteria was over 20%, had X amount of volume trading pre market. And the singular best entry spot on it was the break of the dip and rip versus buying the dip on it. Now, the effectiveness of that started changing about a month after I started tracking, but it was working that well for the previous 3 to 4 months. That's I used my data for actually I think it was the entire year of 2022, which was a pretty slow year altogether. Um, but yeah, that's one thing I've really changed is only buying that break of the dip and rip. So what are we at? Moln here?
Yeah. Let's see. 1 4.
I'm
All
gonna
right.
pull
I
this up on mine
believe this day I oh goodness, look how ugly that is.
too. All right, 1 4, 1 4.
Nine.
All right. All right, so you're on January 4th. Let me head over. I'm just gonna look on my screen too, just so I can get a full zoom. Oh, I remember that. Yeah, I remember this. Yeah. Okay. Okay, so
Oh,
you
no. I bought it up here. Whoa. No way. Okay. Alright, so let's just zoom in some more here because this
Yeah,
is
yeah,
where
let's
I
see.
really bought it. Oh, I remember this like yesterday now. So
Can
what I
you,
did
can you change this to a 1 minute are you on a 2-minute chart right now?
no, it's 1 minute.
Oh, is it? I'm also looking at your screen on, like, this little mini hold on, let me put that full screen for me so I can see. Oh, yeah, okay, there we go, I've seen where we are here. Yeah, oh, that's fun.
Look at the volume confirmation, but yeah, okay, so this is where I clicked buy right here, but I literally got filled right there.
Alright, so you got some slippage on the fill.
And then I go to click sell right here, but then I got filled right there.
Ooh, brutal, brutal.
Yeah.
Okay, so I'm gonna take a look at this on my screen here too. So you're buying what was the time of day you bought?
9:57. I was looking to buy the break of the 9:56 candle, which was a high of 1311 with a low of 1307. So, you know.
Okay, so can I go ahead and share my screen again real quick?
Yeah.
And you'll have to go back to yours. Um, all right, so I'm gonna go share this and let's go. Where are we? Here we are. Cool. All right. So we are on the daily chart here. So I one thing to note too, and I want to let's turn off extended hours quick. Okay, so that day here, where's the fourth? Where's the fourth? Right here. So I just like to map out kind of the multi-day trends that I'm seeing when I'm looking. I mark out when I'm doing multi-day charts. I do a bunch of these. But so one thing that I didn't like about the day of this, which the day of the fourth, is that on the wow, I have way too many drawings on that, but whatever. So there were a couple big trends setting up and obviously extremely far away we were extremely far from the really big picture multi-day trend breaking out. But down here on the fourth, I like the idea. I like the idea of going for this kind of multi-day trend break that was setting up. But on the intraday, we have an issue, in my opinion, right? Is that I see where you're going for kind of almost buying like this micro trend right here.
Yeah.
I think that given the fact that it hadn't broken out of any multi-day trend yet on this side of things, so the trade that you're talking about took place right here. Um, so that hadn't broken out of any of these trends that I've drawn yet. So, like, in my opinion, it was still too early on the multi day. And now that's not always an issue either. Like, I'm not claiming that I only buy when a stock is over that trend break. But if I'm doing that, I'm being extremely selective, right?
Yeah.
This is the real trend. I'm going to clear this drawing set again, and then we're going to focus in here. I need to wait for at least this trend to break, at least, right? Ideally, it sets up a bit longer because we had just such low volume on this. And I know you actually do a lot better on these style of trades than I do. So take this with a grain of salt. But I'm seeing this trend forming here. That's what I'm seeing. And we have a relatively, I also like to look for the trend lines to be relatively symmetrical in the sense that, like, the slope of which the uptrend and the downtrend are forming are pretty equal. Like, I'm not looking to buy trend breaks like this all that often. I'm looking for it like more like this. So I would have wanted to wait for this to break before I start buying. Um, and that would, I think, be my biggest kind of critique on this trade, but I kind of want to hear your thoughts as to maybe why you took the trade because again, you trade these better than I do. So maybe I'm missing something that you were looking at. I'm going to
Well,
stop sharing here and give you your screen back. So if you want to go through and share that again.
yeah. So, other than just the intraday, I was looking at still there?
Yeah, yeah, yeah. Yep, still
Okay.
here.
All right.
Sorry,
It's a little bit
I'm
too
just watching
quiet.
the screen. Yeah, I know. I talk all the time, so when it goes silent, it's a bad sign.
uh, okay, no. Okay, so what I was trying to get this lined up.
Mullen actually still looks great.
Yeah, one's dead to me now.
I hate that. No, I hate that stock. I really do.
All right. I mean, if you look at it, it's an ABCD on the daily chart. And then we were getting an ABCD lining up on the same exact day. And if you imagine, all right, so A, B, then here comes the C. So you're expecting it to get over the high of 1340, and you're going to have a way better risk to reward in here. Looking for it to break this whole wedge, ideally, maybe you'll sell some up here and then swing some for higher, was the play.
Okay, yeah. So I do like what you're looking at on the daily chart, definitely. Um, and the issue I have, this is one of the big issues I have also, and I'll let you get back to the intraday in just a second, but I do want to say this. Um, when I'm looking at like an ABCD on a daily chart, I really struggle with the timing of the C. Um,
Right.
it really, yeah, I just struggle with that timing because again, it theoretically, if we're looking at these on a daily chart pattern is a daily chart result, right? So if we're looking at an ABCD, that D might not come for a few more days. And here we are, right? Still overwhelmingly pretty much at the same price. Um, and so I like the concept of going for that. However, that's why I like to look for that confirmation of the multi-day trend break, or at least of one of them, because the real C breakout and really going into the D, what price would that be? Like $18 a share? Is that really bigger picture trend break? Is $17 maybe?
Uh,
Like where's that? Where would, if we were to break out today on that line, what would that price be?
1720.
Right. So I mean, that's where we really should start seeing explosive results. So okay, actually, I'll let you keep going here. I don't want to take over this. So
Well,
keep
you're
going on
fine.
your side.
I do remember that you brought up the fact that you thought you were like, no, I don't. In the moment, you thought, no, I don't like that wedge, which I took it anyways because I don't just trade or not trade because someone else didn't say so, you know. But
100%. No, yeah.
you said, and I remember it now, is you said I would wait for 14.
Because that multi-day breakout. Yeah. I actually remember this. I remember giving this webinar. And
Yeah.
I do remember looking exactly for that. And that, now of course it's even easier to see it now that it's consolidated for a few more days. But like that 14 level is proving to be like the level. And now that's still a watch through a 14. Well,
Yeah.
is it?
And
It's
look
already
how it
through
closed
14,
right up
isn't it?
next to it.
Yeah. And what are we doing after hours here on this thing? Oh, nothing at all.
Nothing.
Okay. Oh, it closed. Oh, geez, it pushed up to 15 today. Yeah. Oh man, I'm getting. That's a good watch for tomorrow, honestly.
Oh, whoa, it broke through 14. And
Yeah.
look
Wait.
how high it went through 14.
Yeah. Yeah. It literally pushed up to $15 today. I
Like, see,
mean,
I would have bought
that's.
right here and got chopped up and then got chopped up, and then you
Mhm.
just come in at 14. You're like, woohoo!
Well, to be fair, I don't actually know if I would have bought the $14. Although, you know what, it did kind of have a little mini micro consolidation at 14.
Right.
It was
Yeah, I
very
didn't
steep,
mean that
but
you. Oh,
no,
it
no,
did.
no.
Look at
But I
that.
mean, yeah, that I might
That is beautiful.
maybe. That's gorgeous because
And
that lined
look at
up
this.
perfectly. Oh, oh my God, it doesn't get much cleaner. Yeah,
Volume wise.
don't tell anyone except people who are watching this webinar.
I
All
wish we'd
9 of
post
us
this
here
to
right now.
YouTube, honestly.
We
That'd be
might be
dope.
able to. I'll talk to the stocks trade guys, see if they're cool with one of these getting put up here. I think this would be a great one.
I mean, you haven't been putting out a lot on YouTube, so.
No, I know this is, and I want to do more. That's partially on me. That's actually a lot on me. Um,
Well,
but
I'm
yeah,
here,
no,
man,
I
to
mean,
motivate you. So.
no, please, I need it. I need it. It's easy to get complacent without the right motivator.
All right. Well,
Um, well,
yeah.
listen, how
So
about do you? Oh, sorry, keep going.
No, I was gonna say, Mullen. I had a couple more losses on it, but I mean, we know the problem. The problem is that when we have multi-day trends, you're going to get chopped up if you try to anticipate them when you should just wait for the trend break or something right at the trend break.
Right, right, and that's I actually used to get in arguments with Dan Irish a lot about multi-day trades and risk levels. So this is getting off topic tiny bit, but like I would always say a multi-day trend or a trade based off a multi-day chart requires a risk level based off a multi-day chart. And Dan kept going on to prove me wrong whenever he traded him. I would trade him and get chopped up. Dan would trade him and be able to have like a 10-cent risk on this multi-day chart where the breakout was $5 away and you'd get like 100 to 1 risk reward on it. And I was like, dude, how are you? I don't get it.
See,
But
that's my problem. I do that all through December. I would buy a high day break because I know that it closed with. See, this is something a lot of people don't realize. So, say a stock is at, and I have these little mini rules like a stock is under $3. It has to close the day before within 20% of the breakout level. If it does, I know that the first high day entry, so high day versus low day, is going to send it over the breakout. So, like, why wait for the breakout if I know the odds say it's going to work over 70% of the time that first high of day, if it closes within this percentage, I think Dan was he taught me some of that where if it's close enough to a certain trigger point. So he might be looking at the first bounce day, knowing that if it breaks over the first bounce day, that it's going to break out on the multi day because it had been
right,
recently. Like there's like multiple things you take into it. So, but that was another problem. It's like once you realize all these things, and Dan ran into this himself because me and him used to talk every single day on Twitter. Was that whenever the market shifted, that would only work maybe 1 out of 10 times versus it went to more of, I mean, it looked like a scalp to him, but for anybody else, it's 10 to 1 risk reward. It's still working, you know.
right.
And
Yep.
he would lose $50,000 when he should have made 5 grand, like
Yep.
so. But yeah, I've got. I wanted to. Can I go to uh my Discord?
Yeah, yeah, absolutely.
I
Yeah,
didn't want
let's
to.
do no, 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 you're 100% good. Let's do like one more thing and we'll start wrapping it up here in a couple of minutes. But yeah, bring this up.
All right, yeah, this is something that I wanted to show, and like I guess if people really clamor about it, we can get into it more, do it more often, which I think we should do it. I mean, heck, we could do it almost every single day if we wanted to, but let's go to my Discord. Okies. I have what's called What Worked Today channel. And so, all right, so what is this? Yesterday. So, yesterday, this is ELEV. And what I noticed is when you get these sideways candles on a stock that is under $1 and it's trading good volume, which I call it like for like understanding purposes, a stair stepper because it's sideways up, sideways up, sideways up. I noticed that that had been working. So how I figured I could play it is I could buy here, risk here, and then don't sell anything, buy more, and then you move your stop up. Buy more,
Yep.
move stop up. Buy more, move stop up. Buy more, move stop up. And then, if you notice, there's no candle to make a new low this whole time except
Yep.
either here or right here. And so that's what I took into today with my INO trade, which I destroyed, by the way. You weren't in
Let's
chat, I don't think.
Yeah, I just so I came in, I opened my stocks trade up, and I saw you like starting to sell your INO, and I hadn't even looked at
I
oh my
mean, do we see
gosh.
stair steppers?
Yeah. Yeah,
I
that's
mean,
beautiful.
so I buy, right here, and then I cut it right here for my
Yep.
first entry. But then I noticed that it instantly faked out, and so I got back in right here, and I did not follow my plan, which is, to keep adding when you have a sideways structure, which, maybe you would have had, some right here, and you would risk this low. And then there's right here, and you would risk this low.
Yep.
And then you can still, like, until it gets a big, huge extension, you don't want to stop out. And so it just kept, doing this trend line. Whoa. Yeah, it just kept doing this trend. So when I got in right here, I took 5,000 shares, and I was supposed to just keep adding, but eventually I ended up, I sold some after this fake out high daybreak right here, and then when it came back and didn't do much more and was stalling, I ended up selling some like I think right here when it got a little iffy. And then I noticed that, okay, well, it's just acting scary, but it keeps on going higher, stair stepper. So I ended up actually getting my best sell at 89
Let's
from,
go. That's beautiful.
yeah. And so my risk right here when I bought it at 77 was literally like 765. You know what I
That's a
mean?
yep.
The risk
Yep.
reward on that is huge.
Well, and I think what you actually just described a concept that I have a whole strategy session on, which is cool because and it's definitely a little bit more of an advanced concept. But I just call it compounding risk, where you're doing exactly that. You're taking a trade that likely, and because in your case, you have the what worked today. You saw the trend in the market. Um, but when you are anticipating being in a trade for a longer period of time, when it's kind of an all-day setup, you're doing exactly that. You're starting in with a pretty tight risk level and waiting and ideally anticipating another ad where you can then move up that risk level and continuously keeping that risk level tight for 2 to 3 ads. Now all of a sudden you've increased your position size drastically, but also have been moving up your risk all along,
Right.
and you just keep kind of moving it up to that last low. And by doing that, now not only are you added what, 2 other times from that initial entry at what, 77? You had
No,
another
I,
two
I
ads.
should had, but I didn't.
I see. Okay, so I see what you're saying. Okay, so you ended up just holding that position in selling into strength. But
Right.
either way, you had a half cent risk.
Yeah.
Were
And
you
it's
moving up
not,
your stop?
I did move up. No, once this happened right here, like, I was like, okay, because I remember, I mean, it's kind of hard to get into here.
No, I get it.
There's
Yeah.
this part of the pattern back here that you can't see that I remembered from the day before, which was that it had a hard pull, but then instantly like reclaimed. And so I figured, all right, once it had that hard pull and reclaim, now I can start moving up my stops again,
Yep.
you
Yep.
know. And so it's like the market literally tells you how to trade. Um, and I can even show you because I didn't just find one. No, like there is here, yeah, many. Let's go over them.
Oh my gosh, are those all from that day?
Yeah, and or no, the day before that.
The day.
So
Okay. Yep.
yeah, so there's INO day one, which is the day I didn't trade it, right? So you get the sideways action, and then I cut because it had an extension off of it and it made a new low, right? But then it reclaimed sideways action and then it's off to the races again. So that's what I was getting at. Um, and then this is me showing how you could kind of add to the little sideways and move up your stop as it goes. And then I noticed there's another one, ELEV, the other day, right? You got to get that
Yep.
sideways action. You buy it, sideways action, sideways action, sideways, and it just keeps pulling up until you get this extension where you cut it, and then it reclaims sideways action, big extension. You cut it on the, and then you get sideways action, and it goes up. It reminds me of the swizzle from OTC, if you know anything
Yeah,
about that.
yeah. Oh, yeah, it looks a lot like the OT swizzle.
And look here too, TCRT. You have this big spike, puts it on your radar, reclaims VWAP, a little bit of sideways action. You buy here, you risk here. It holds just fine. You can add more here, add more here, more here. Then you get the big extension, and you wait for the low right there. So I had been noticing that, and that's basically how I came up with my plan on eyeing up.
No, I love it, and I think this is obviously something now looking at that, we need to be doing more of these what worked today because that's just a great way to one, get yourself prepared for the next day, but I think it just shows everyone different ways to look at the market too. I mean, like you said, the market tells you what to do if
Exactly.
you look for it, right? If you're looking for it. And I think it's a really great example right now of what we're seeing is we've got this kind of compounding risk factor that is working just like a swizzle, working like the OT swizzle.
And you know
Um,
finviz.com, right?
yeah, oh yeah,
So this is how I find them. I call it hot chicks, right? So this is what's great about Finviz is I don't know if you know this, but see all these tickers, I can just scroll over and it gives me like a 1 year
yeah,
snapshot. So
yep,
and on my hot chicks is basically so I'm looking for like what closed up over 15% and what has the most volume, and then I'm looking for like two to three, four stocks that are doing the exact same thing on the same day, and that tells me that most and algorithms I don't think they can catch on the very next day. You know what I mean? It's like, I mean,
right,
I'm not going to
yeah.
put anything against AI or anything like that, but like, I mean, what more can you do if you're having to learn something new every single day and doing that? Like, I think that's
Well,
why it's working.
right, and that's kind of the thing too, right? Is like algorithms are meant to do one job, and yeah, there are going to be some that can adjust that quick, but for the most part, they're built looking for a specific criteria. So like they're not changed daily, or else it wouldn't work because that wouldn't be a strategy for the algorithm. Now they do catch on,
Right.
and obviously a lot of those algorithms are built by people who are pouring a ton of money into the market and realistically kind of moving the stocks anyways. But like they're the ones that are actually creating this opportunity in a sense, right? And I think that's kind of what you're getting at in a way. That's why these opportunities happen, is because the algorithms can't change as fast as they essentially create the opportunity.
Well, I think they come in on day three sometimes, and definitely on day four of the pattern on these what work today setups. And then they're fake outs. But it's like, okay, well, I'm already looking at something different because I've just seen something else work. So why am I going back to that? Anyways,
No, absolutely, you're hitting the nail on the head. I like it.
so that's why I'm hoping I can avoid these big red days. So like today we had Holo make a great move early. We remember that. And then,
Oh yeah,
and we look at
yeah. What did
Zcar. I
that
mean,
end up
that's a
doing?
beautiful day three surge. you
Oops, where are we? Let's see. I want to check this on mine. Whew. Oh, that was really nice.
know,
Yeah. Oh, that's a great third day surge. I saw some people talking about that here in the chat. I actually need to add that to a watch list. That's
I mean,
probably at least worthy of. It might not be a trade tomorrow, but I do want to
right.
keep an eye on it.
I mean, SLDB. Do you remember me talking about that one this morning?
Oh yeah. Oh yeah.
See, I
And
got
that's
longs
another.
right
Yeah.
here.
I was gonna say that. I mean, maybe not as clean as INO, but that same kind of concept, though.
Well, I got this concept. See, this is a whole different thing now because
Oh,
because of
let's see it. Let's see it.
yeah. Let's check it out here. Nexi. So this was what happened yesterday on Nexi, right? It gets above the 9 EMA. You have a high day break, and it goes from 650 to 9. We had four stocks that did the exact same thing. NKTX was another one. It was a $6 stock with a
Yep.
float that was under 30 million, just like Nexi. High day over the EMA, and you could have bought here, and then you just risked the EMA. And so that's kind of what I did. Yeah,
Yeah.
9 EMA here. So it was a high day above the EMA, and then I cut right here, and then I missed the re-entry right here, which I would have cut here, but still, like, I mean, that's just like what I'm working with. That's how my mind is working. Obviously, this didn't have the volume that the other ones had, which is why I didn't really hop back in it. Um, but I mean, that's
No, but
just the
I
thought
mean, that's
process.
no, and I like that you're going through here and oh did I just unplug something? No, we're good. I thought I just turned my whole computer off. I like that you're going through here and looking at like I think I said it this morning, like who is Okie risking an EMA, but here you are finding the exact reasons why. You know what I
Right.
mean? It's what's working right now.
Yeah,
And
look how I held that
and
so
you
well.
yeah,
Me
no,
next to.
extremely well. Same exact thing. No, that's gorgeous. I mean, even that right there, that's not something I would have personally noticed. Um, because I guess how do you use EMAs
No,
quite
I
often or
don't.
no?
But if look how like that's not normal action. Like that's it was like being held up. So
Yeah.
I was like, why is it being held up? Is it bouncing off an EMA? I don't use EMAs ever, but when I realized it felt like it was being held up by an EMA, that's whenever I threw one up, and sure enough, you know.
Yeah, we need to do we'll get these scheduled. I mean, um even if it's one or two a week to start. Like I really like this idea of what worked today.
It doesn't take me long, honestly. Maybe it took me about like maybe 15 to 30 minutes to kind of see what I liked, and you know, I obviously went over it a few more times on my own the same day, but like I don't think it would take us any time at all to do a little
No.
study session.
No, and it would be a nice quick way for traders to review the market at the end of the day too, and I think just get to really at the very least learn a different perspective about it, you know, about the
Sure.
market. Um but all right, listen, I'm gonna if you don't mind, I need to get wrapping up here. I've actually got a basketball game to go play tonight, so
Oh
I've
yeah.
got a little
I gotta
but
get dinner anyway, so
oh, that's I probably should get a snack first. Dude, this was great. Thank you.
heck
I mean,
yeah.
we'll I'll be I'm traveling this weekend, so I've got to really be packing up here too. But let's plan out a day next week. And guys, I'll if you're watching this now, this will be posted as a replay here at some point. But really take some notes during this. This is a really good strategy session we got going on here. Thanks. We'll do this on Vimeo next time again too, if you don't mind. I'd
Yeah,
like you
and
being able to share your screen a bit.
also you could edit it. Like you could go over this video and clip things out with different titles, and, you know, so that the lazy people can still get their fix.
Do like a little chapter section or something like they do on YouTube.
Yeah.
Actually, that's probably not a bad idea.
Yep.
That's not a bad idea at all. All right, man. Well, have a good rest of your night.
Yeah, you too.
Everyone that's watching this, thank you for watching, and we'll be back here with another strategy session soon. All right, take it easy, Oki.
Take it
I'll
easy.
see you in chat tomorrow. Yeah.
Yep.
Have a good night.
You
Bye.
too.